Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice.
G'day and welcome to the latest episode of Vantage Point. On today's podcast we have LGI, which, surprise, surprise, has a ticker code of LGI on the ASX. LGI is an energy company that specialises in capturing biogas from landfills and using it to generate and store electricity. Everyone likes growing companies with industry tailwinds that are founder-owned and managed. And LGI has some pretty impressive stats behind it. 50% EBITDA margins, double-digit EBITDA growth, profitable every year since being founded in 2009. And the listing on the ASX some 2 years ago was all for growth equity, and the business has funded growth through internal cash flows. It's fully funded to triple its megawatt capacity, and it's more than 35% owned by board and management. With that, it's a pleasure to have Jarryd Doran, LGI CEO, on today's podcast. Hope you enjoy.
Thanks very much for joining us, Jarryd. It's a pleasure to have you in the office and recording on today's podcast. Before we sort of get into the nuts and bolts on the LGI story, perhaps you could just give us a bit of a background on exactly what LGI does and the origins of the story.
Sure. Thanks for having us here, Simon.
Pleasure.
So LGI is a specialist in biogas recovery and renewable generation, or renewable electricity generation. In working in this sector, this gives us access to a range of revenue sources. ACCUs, electricity, renewable energy credits, but we're also able to work with different clients and different customers to service their needs. And sometimes this could be selling carbon credits, selling electricity, or just servicing like an O&M style arrangement with them as well.
And just before we bamboozle those listening, can you just give us a bit of on the acronym side, ACCUs, LGCs,
Sure.
What it all sort of means?
Plenty of acronyms in this sector, so apologies for that, but ACCUs are Australian Carbon Credit Units, so you create those through abating emissions or demonstrating that you've achieved an emissions reduction by capturing the biogas from a landfill site and avoiding that from going to the atmosphere. You're abating those emissions. So that's one of the revenue sources there.
Yep.
LGCs, or large-scale generation certificates, you're creating this certificate because for every unit of electricity, it's deemed renewable, which is quite valuable in our energy transition. So those credits are bought by retailers or large energy consumers as a way of having a tradable commodity to say they are incentivized or they're sort of helping in that energy transition piece. So ACCUs, LGCs.
Perfect. I'll just knock that one on the head before
Yep.
before we lose people. And just the company's coming up to its second year anniversary in terms of being listed on the ASX. It was founded by Adam Bloomer. Can you just give us the sort of background, how long it's been around for, and just the purpose of listing on the ASX and your experience so far on the ASX?
Yeah. Well, LGI was founded in 2009, Brisbane-based company by Adam Bloomer. Adam's still our managing director and a primary shareholder, the largest shareholder in the business. So that journey started from Adam founding the business. He had his brother, a nephew by his side, and Adam himself was actually out installing pipework in the landfills in the early days. And back then was actually when I first met Adam back in 2009. So as the business continued to secure new contracts with councils, lock in more landfill sites under these long-term deals, naturally there's a need for capital. Adam secured a co-founder, in a sense, was Tim McGavin, and he came on board with his brother in the early years. And that really helped LGI grow, not only just with the capital needs, but they brought some more financial credibility to the business, just supporting Adam in ways that he didn't have access to or he didn't have the experience himself. And that was a nice transition in itself. Probably by the sort of 3-4 years later, Jessica had come into the business. Jessica was a consultant originally, helping out, providing advice around carbon methodology, opportunities in the carbon market. And it was another couple of years later that I joined LGI in 2014. So the early days were all of us in together, small team, generalists. Everyone just had to get their hands dirty and be prepared to go out to a landfill, tune a site, be in the workshop, help put a flare together. It's quite fun.
Just a true sort of startup in hustle.
Yeah, correct.
Yeah.
And never really having a sense of like a work day is just X hours in the day. Because we definitely were there from a common interest and a common belief.
Yeah.
But what we saw as we were growing as well was you naturally have to bring in, people with more specialized skill sets and particular talents. And that then in itself introduces some new challenges around, providing clear guidance, prescriptive position descriptions, all the sort of, administrative elements that go with it as well. But the business kept growing. We kept offering a compelling service. We're profitable. And that's really what led us towards looking at, well, how do we keep funding this growth? There's just so much opportunity here, both in landfills that don't yet have a system in place, or sites which were previously serviced by one of our competitors. And the growth needs have just continued to grow up, year on year. So the business model, it's quite robust because we were able to partially, fuel that growth through our free cash flow. Through those ACCUs that we create, month on month. And really the attraction to looking at the listed market just became a natural evolution of the thought process. We took on some, we did an off-market raise in 2017. We took on some new shareholders. And that gave us a flavour of broadening the registry. A lot of them are still with us today, so it's been quite nice to see, consistency on their behalf.
It's probably due to your delivery as well.
Delivering, yeah. Delivering is always pretty important, or very, very important for that matter. We looked at it again, after probably 2019. Well, we'd won more contracts. What's next? And what's an efficient way of doing this so we're not, every few years just looking at a raise. Now, the listed market was quite attractive, and so we certainly went down that path.
And in terms of, I spoke on the top about you joining as CEO some 6 months ago. Can you just talk us through your evolution within the business in terms of what you joined doing? You talked about sort of hustling at the start, and just the evolution to being the company CEO.
Yeah, so I started in 2014 as a project manager. LGI had secured a couple of sites, had plans to grow more, but the sites it had secured already, we were looking at, how could we take these from a flaring opportunity where we recover the gas and destroy it through a flare and create the ACCUs, the ACCUs, into power stations and creating more value. So the early work that I was engaged to help LGI with was to come up with those engineered plans with Adam that would allow us to roll this out, cookie cutter from site to site. And that was really fun because he'd done the selection of equipment. He had experience in which type of generator, what transformer, because these are all pieces of equipment you can effectively order, but putting it all together and actually making it work, that's quite fun. And then doing it time after time and trying to learn and make it more efficient, that was quite enjoyable.
And just when you talk about the replicable nature of the business, is it just an off-the-shelf sort of business model, or can it be replicated, or is there sort of IP and processes built into it as well?
Yeah, I mean, this comes up quite often because naturally people want to try to understand, what's the supply network look like, the upstream supply. So the bulk of the componentry is available from various manufacturers around the world. The generators that we use, it's an entire package that we purchase. So people are welcome to go and buy them. But yeah, actually putting it to use and using it in an efficient way is quite key to us as a team, what we've learned. And then our IP is the value creation. So the software that we're using, on how we trade our energy, the way in which we install the gas systems and how we may alter the well installation process depending on the types of waste. These are all elements that we've just better understood over time, and we're just constantly trying to, learn, improve, and make it better next time.
And before we sort of get into the nuts and bolts of the sort of financials and the different projects and revenue streams, can you just talk us about the board and the team and how essential they've been in the success, particularly post-listing?
Sure. So Adam, the founder, is one of our board members, managing director. Tim McGavin, early investor, key to that early growth as well. He's one of our board members. Jessica North, who was the CEO for LGI for 7 years. She's a executive director. My apologies. But approaching the listing space, we saw there was a bit of a gap in our skill, makeup of board members. Andrew Peters, one of our board members, has lots of experience in the energy sector. So he came on board in that 2017-2018 period from memory. But we needed to have directors that had listed land experience and who could help us through the governance, the market exposure, and just provide that support and direction to the team. So we secured Vic Barnsell, prior to this process, and Abby Chiddell as well. Now, Vic obviously has his own, reputation that's been formed in a great way of delivering results, growing businesses, turning businesses around. So he's quite an impressive person. And Abby has the experience of, from a forensic accounting background, also turning businesses around, getting right into the detail of, what can be done with the business, how might that, position it for M&A. And so we now have this really good mixture of talent at a board level, which makes for great conversations, great discussions. And always you walk away, with lots of things buzzing around in your brain.
Which is a true value add board.
Yeah.
Yeah. So, Jarryd, just in terms of, if we sort of step back and have a look at the sort of financials or the company's revenue streams, can you just sort of talk us through where it sort of come from, say, from 2 years ago on listing, how many more projects there are, and what the sort of revenue and earnings profile looks like at the moment?
Yeah, we've had to take the whole market on a journey here, of helping people understand what are these ACCUs, what's an abatement credit. Because at the time that we approached the market, this was very new. And so naturally, every meeting, every introduction, there was almost half of it dedicated to the regulatory framework, but also the business model as well. So the ACCUs that we produce, are a core part of our revenue base. It's about 40% of our earnings.
And so just practically, how does that sort of work? Is it benefiting from the volatility of the energy market, or?
So the drivers for this are set down from a government level. So federal government, we're signed up to the Paris Accord. Across the world, various countries are trying to see their emissions, reduce, if not get to net zero. And that's then the driving force from a top-down approach. Then how that flows into industry is various sectors across the economy are expected to, do their own heavy lifting. Energy is one of those, but ultimately, if they're unable to make a reduction within their production, or their business case to bring it down to a lower level, they can buy credits, and these credits become a tradable commodity. So over the years, while we've been creating ACCUs, the whole market's shifted around. It's gone from the government, the federal government being the primary buyer for some years under the Emissions Reduction Fund. And that was great, having a 7-year government offtake. I mean, how many businesses get an opportunity to do that? So we were pretty happy with that. And then as the markets evolved and the buyer is now shifted to industry and the economy, those government contracts have rolled off, and we've been able to engage in corporate offtakes, so that they can feed into what their strategy is, partially being serviced by some of these credits, but also through them making an investment or a change to their process.
And what's the sort of, without sort of having it right in front of me, what's the sort of price done, over the last few years in terms of ACCUs?
Yeah, so that change from the government buying scheme, prices averaged in the sort of low to mid-teens typically across those contracts per ACCU. And what we're seeing now in today's terms, so right now it's around the $34, $35 range. So there's been a healthy price increase for what we can sell them for. And what we love about that is, our approach to a site, how our people install the systems, the flares, we manage those costs in a very tight way. As that price movement continues, so we expect it to continue, that will just flow through, our business in a really positive way as well.
And can you just talk us through, maybe one of your sort of core projects, sort of practically from a case study in terms of what, whether it's the land or a tip, or what's the benefit to them, what's the benefit to you, and the sort of what it spits out of the other end in terms of revenue and whatnot. Yeah,
I mean, most landfills around Australia are owned and operated by local councils. There are some very large waste, operators, the Cleanaways, Veolias, Ramondis, but fundamentally these sites are all the same. Waste material coming in, it will break down, it will produce gas, liquids, and some residue materials. The gases, though, contain methane, about half of it's methane. Most of the other parts are carbon dioxide and various materials. So By using that methane, as I've said, we can use it as a fuel source potentially, or we can flare it off.
Yep.
But if it's not captured for the operator of the site, this becomes an odor issue. It can become quite a problem, especially in a social license aspect of nearby households, land users. So naturally over time, they're incentivized to not create harm or not put their license to operate at risk.
Yep.
And it's quite common that they go out to the market. They go through a competitive market process. So LGI will put forward an offering, which is typically that would get to the site, manage all of the capital outlay. So putting in a gas collection system, the wells into the waste, all the pipe work, a flaring unit if the size of the site is quite small. We'll design, install that flare and operate it. And in doing so on a smaller scale, we'll create those carbon credits and then share some of that value back to the site operator as a royalty for the exclusive rights to that biogas.
So in other words, there's a win-win.
Yeah. And then if the facility is of a growing sort of scale, if more waste is coming in or simply we're able to expand the system further, there can be enough gas that we can run a power station or it can support putting a power station down. And that's really exciting because you then introduce electricity, those LGCs, those credits, and then potentially also the batteries. This is a new space for us as well. So you end up with a very broad spread of revenue that you create just from that biogas, and you unlock quite a bit of value. And again, in our model, we then share across that top line, we share a percentage back to them as well.
Yeah. Just in terms of from a revenue and earnings perspective, how it's sort of trended over the last couple of years, and obviously the latest results just come out. If you could just talk to that.
I can remember back only a few years ago where we'd celebrate having revenue of $1 million per annum, and the team would be pretty chuffed to achieve those kind of results. So the FY24 results that we've just put to market are, in excess of $32 million of revenue. Quite a bit of growth over these years. And having our EBIT margin at around 47%, it's quite a healthy, business model that's been established.
And you talked just before in terms of going to tender or going to offer to different councils or businesses. How do you fare in tenders typically, and how's the sort of process? Is it usually councils or what does that sort of look like?
Yeah, so the client base across Australia, landfill owners, mostly councils, some private sites. So over the years, our clientele ratio has mostly consisted of in the high 90% of councils or local government, and with the occasional private waste contractor. Some of the more recent contracts we've secured, say with Bingo Waste Industries and their Eastern Creek site, that's quite a sizable site for us to bring into the portfolio. But that's the typical mixture of who you're interacting with, and they are a very competitive public process as well. So if it's a council, they've got strict probity measures to uphold.
From a success rate in terms of tenders?
From memory, this is tracking in the high 80%.
Yeah, okay.
So
pretty high.
Now, we don't win them all, and we are often disappointed when we don't win, but we use that as a lesson, or an opportunity to sort of unpack and say, well, what could we have done differently? They are very good at giving feedback as well, so it's always quite interesting to hear
process. Yeah, that's good.
Yeah.
And you spoke about batteries, and I know the market's sort of pretty excited about the prospect on this side. If you could just take us all the way back and educate us on how batteries come into it from landfill.
So with the electricity that we create, we are connected to the NEM, the National Electricity Market, just another acronym in there. But the wholesale market, the price actually changes every 5 minutes. So every 5 minutes there's a repricing that occurs, and everyone in the market is expected to react to it. Now, it's a price signal to try and indicate, do they need more or less electricity relative to demand? What's been occurring in Australia for quite a few years now is the correlation between weather and electricity is very tight. And the more solar generation, the more wind, that then introduces more variability. And so over the last 10 years in particular, we've seen pricing, which used to be quite stable most of the 24-hour cycle, becoming quite volatile. And that's okay. Like we were observing these changes and we were positioning the business so that the equipment we were selecting, it's flexible. So those generators we use are a flexible gas engine. We can ramp them up and ramp them down within a 5-minute period. And that's okay, but what we need to remember is we're fundamentally at a site to recover the biogas. So we don't want to go through periods of not recovering the biogas.
Yeah, so yeah.
So the concept of the batteries initially was as much looking at, well, how can we continue to recover the biogas, generate electricity, store it, and then use it to be dispatched or sent out in the market at a higher price point? And that's a very simple, approach of just shifting to the higher, prices in the day. But also batteries, when you get closer to it, you can use them to access new markets. So there's other revenue sources in the energy market, which batteries can participate in and the generators themselves can't. But it can also allow us across the portfolio to alter our financial hedging program. So the way that we have comfort in what FY25, FY26 earnings would be, is we do forward sell parts of our energy portfolio to de-risk it. We retain some degree of exposure to the spot market, but as the battery rollout through our program, over the forward years proceeds, we can change that mixture, and the batteries will actually act as a physical hedge to the generator. But you've got a far more flexible coupling of equipment. Batteries are instantaneous.
Yeah. So I've seen Dean get excited with the volatility in the prices and whatnot. And you guys are uniquely positioned to, particularly if you can scale, because there's a Bunya, what's the project? If you can scale, you've got one site, with the batteries at the moment. Is that right?
That's correct.
But if you can scale that higher, there's no one, particularly in terms of earning accus or generating electricity the way that you are in terms of ridiculous margin, really.
It's quite unique. When you stack up the revenue sources, it's a very attractive model. So the Bunya site that you touched on, that's a recent project of ours. We'd been generating electricity there since 2018 from memory. And the reason why we chose it for the first rollout of a battery was it was really well placed from a number of factors. So the local area, because we connect into the distribution network, a lot of rooftop solar. So in the daytime, the market price is lower down. But what you actually see in a localized area is all that solar starts to actually create some issues for the network authority, and it moves the voltage around and the frequency. Now, when we proposed the site for the battery, part of what we proposed was the fact that the battery can do all of those things I talked to earlier. It projects the downside risk of our generator, new revenue sources for the business, great. But for the network, it actually helps them soak up that excess energy and stabilize the daytime voltages, the frequency. And they then become other revenue sources as well. So when you look at that from a project-to-project basis, there's a natural upgrade that we'll do to most of our sites where it works. But taking that exact model and then up at a larger scale is what we're working on with our Canberra facility right now at Mugger Lane. So we've just finished the construction of the 2 extra generators. Now the site's got 6 gas engines. So that's quite an increase from when we first set the site up. But we've also done all the preparation work for the batteries to be installed. The switchgear is there, the connection we have with the network authority. The batteries should be coming onto the site in the sort of 12 months' time from now, so August, September next year. There'll be a process of connecting them, commissioning them onto the site. But the really exciting piece there is just the size. So it'll be a 20 megawatt capacity facility, 6 of it coming from the gas engines. There'll be 14 MVA of batteries installed, so quite a bit more storage than we have at Bunya.
What's Bunya?
Bunya it's a 0.6 of a megawatt generator, and it's a 1.2 megawatt.
So it's significantly scaled up.
Yeah, correct. So it's almost the Bunya site, but on a factor of 10.
And in terms of the Bunya site, there was, particularly from an investor perspective, there was, you've got to prove it right, that it actually works. What's, in terms of the economics that were sort of proven in it, what sort of spat out in terms of margin improvement and those sort of things?
So there was an awful lot of spreadsheeting, modelling, as I'm sure you can appreciate. And while Dean, our CFO, and myself and the team get excited by the numbers from a spreadsheet, when you start talking millions of dollars of capital, you need to actually have something you can point to and say, well, we're comfortable here. So it was a proving ground, or it was a pilot site for us. But ultimately, as a business case, we had expected returns which have now been exceeded by the operation we've achieved since February. And the way that we look at it is, again, by storing the energy that we generate in the battery and dispatching it at a higher price point, we're looking for a price uplift to what would have otherwise been the average price we would have been exposed. And the measured rate for that site since Feb is 55%. Yeah. So we've achieved a 55% increase in that value. And when you then flow that back through, your models with a return, we're seeing returns of, a return on investment within 4 years, 5 years max. If there is more volatility and more swings in price, the return can actually come into sort of 3 years.
And obviously that's the attractive nature of actually scaling that up and putting that in Canberra. That makes a whole heap of sense. And in terms of your existing operations, they're mostly within New South Wales and Queensland at the moment. Is there any sort of potential to expand that further out, or is it a climate sort of related issue? What does that sort of look like?
The growth opportunity is across Australia. We've definitely formed a strong base between the two states of Queensland and New South Wales, and we have a presence in the ACT. Whenever we have an opportunity, we look at it, whether it's WA, Victoria, South Australia, Tassie. We also have to consider what would our cost of servicing be, and while we think we offer something very strong and compelling, how would that factor in given we're quite a distance away from some of our competition? So we're very, honest when we're sort of asking ourselves these questions. And to date, there's actually just not been something which has warranted us setting up a presence, in some of these other areas. I'm pretty confident through that contracting horizon of older sites that EDL and LMS did very well to contract some years ago. They'll mature and come to the market, and that may enable us to then set up a presence. And that's effectively what we're able to do with our Canberra facility. By winning that contract in 2019, we could build a site, put an office there, staff it, and then use it as a hub to go out and service other areas.
And you talked about, within the competitive landscape, how does that sort of look if you're winning roughly 80% of your tenders? I'd say that you're a sort of one of the, if not the leading players in the industry. How do you sort of measure up? Why would you lose in a tender?
Yeah, I mean the loss rate is quite low, but it does happen, as I said.
Yeah, sure.
And it's really just required us to go back and question, well, what are we offering? How is it different? And even if we've lost it based on the fact that perhaps the competition offered more, well, we've still got to be happy with us actually having a margin that's healthy for our returns. And so there are some instances where we just say, you know what, we know we've put our best foot forward. If we stepped down from that, we're really not doing ourselves, our shareholder base, a genuine service here. So that is just the honest truth.
Yeah, I think investors much prefer not having lost leaders and sticking to your margin profile and whatnot. It's much easier to model out, that's for sure. And just in terms of, from an M&A standpoint, there's different industry players, both within your industry, but particularly the sort of bigger players outside that have emission problems and whatnot. Do you sort of see anything in the sector? It doesn't have to be in the next 12 months, but in the next sort of 5-7 years, where they look to sort of have an end-to-end process and own someone within the sector?
Yeah, I mean, we talk about this quite often because as much as we're focused on growing the sector that we're a part of, the waste sector, the energy sector, there's so much change occurring. And I think it is just a healthy concept to think about. How could it be, or how might our model either fit well within another entity, or how could it service or work with another entity is part of sometimes the thinking. But without knowing what's happening in 5-10 years time regulatory wise, or what are those drivers, what we're quite confident on is just rolling out that capacity across the portfolio, that 47 megawatts across the existing sites. And naturally, sites that we have will understand more as to what could we do with it, and how could that be upgraded, plus new sites coming in, and that 47 megs of capacity would certainly, I'd expect to see it expand further. So, more renewable energy, more carbon abatement.
And when you sort of look at the business, what excites you the most? Is it sort of expansion across existing and additional sites, or is it the battery side?
I'd say the batteries is pretty cool.
Yeah.
It's really a relatively new technology for the energy market. I mean, batteries, yes, we've all had them for quite a while, but using them in this way, the layers of technology, the software, it is very impressive. And so just to give you some flavour to that, The Bunya site, how it operates, when it sees deviations to that frequency in the localized network, it's able to react within microseconds. And again, you just can't get that from whether it's a coal plant, gas plant, or anything like a wind turbine, solar. So it is very impressive, and we're very excited by it. But working with new clients too. So the exercise of getting close to what was Bingo looking for with their Eastern Creek site. How might our solution fit in well to that? That's quite an exciting project, of that size and of that type of format.
Perfect. So, Jarryd, we'll just sort of change tact a little bit in terms of, I know that you don't want to talk too much about yourself, but you're obviously stepping in 6 months ago as CEO. It's been a success from a results perspective, but I'm sure the hard work was already laid before you. In terms of how you sort of look at the business going forward from a culture perspective, is it still a strong sort of mission valued company, or how do you sort of judge that, and how do you push that going forward?
Yeah, I mean they're key. So describing the earlier days of LGI, where there was half a dozen people that knew what was required, but also knew that we didn't have a broad range of resources. So everyone just jumps in. That works for a period of time, but that scaling and bringing in new people, you lose that, or by having too much flexibility, I should say, you don't really get the valued outcomes that you're seeking because there's not enough clarity from each individual. And so Jessica and I worked through this probably 4 years ago now. It was obvious that we needed to make that shift. So Jessica being the CEO at the time, we acknowledged that we had a clear view and an understanding of the strategy and the opportunity, but it needed to flow all the way down through the team. And so we formulated, unique accountabilities and KPIs for each individual across the business, but they all link back up into the organizational goals. Like we want to see year-on-year growth of biogas, ACCUs, electricity. We want to see that rollout of capacity in our new projects, because all of this together is what will achieve year-on-year delivery of results. It will see us, build out, get a return on the investment, and everyone can high five, as each year goes on and we deliver. So that was actually quite an effective process. And there are periods where there can be a lot going on. People can get a bit flustered. And just bringing people back to, why are we here? What are we working on? Just keeping it real. Getting away from being distracted by the busyness is pretty important too, which can always be a temptation.
And how many full-time employees have you got now?
We've just gone over 60.
Yeah, okay. So it's still it's big enough, but you're not too big that you sort of lose control in terms of you still have that sort of central purpose and hunger and hustle.
It's definitely getting hard now to remember, not just the partners of every staff member, but the kids and the dogs and all the names. 60s, it's getting up there.
That's exponential growth once you go past that.
Yeah.
And just in terms of, particularly, maybe you haven't had too many, but in the last 6 months, or sort of stepping into the CEO role, what have you sort of found the most challenging? Is it you're already dealing pretty heavily with investors? Has it been seamless, or has it been sort of anything that's challenged you along the way?
I feel it's definitely been seamless. I'm quite fortunate, not only having worked with Jessica for such a long period of time, that we had talked about this potential transition for her. But it also needed to obviously be, given the blessing of the board and the backing of the board. All the while we continued to deliver and we kept the business moving. So it's great having the support of someone like that, because it was a completely amicable process. Jessica is still a key part of the business. She's a mentor of mine as well. But also having access to the caliber of board members like Vic, who is very generous with his time, even with his busy day of his core day-to-day job, he's still available. I can always still get a hold of him, and we do reach each other quite often through the week. So that's been quite key, I think, to just helping through the transition.
Yeah, it's invaluable for sure. And a bit of a pie in the sky sort of question, but always a nice fluffy one to end. It sounds like there's endless opportunities and tailwinds, from a legislative perspective, and just where the industry's going. But where do you sort of see LGI, over the next 3 to 5 years? What does sort of success, non-financially, look like to you?
I mean, continuation of what we're doing, right? High success rate winning new contracts. we'd love to see our footprint expand, not just on the East Coast, but to other parts of the market where it makes sense. Rolling out this capital-heavy program, but really putting ourselves in a strong position where we can respond to energy market needs and provide that flexible, service of energy out when it's required, or soaking it up when the pricing is telling everyone turn down. But you also start to look at, well, what adjacencies are available to us? What can our skill sets perhaps be lent into and further help grow the business? And so with the technology change and also the regulatory changes that are most likely to occur in the next 5 to 10 years, that's a pretty exciting space to think about. So I often describe our business as we're on this journey while a transition's occurring in our sector. We're moving through and we're becoming more of an energy platform, less of a specialist biogas piece that's core to what we're doing today, core going forwards. But certainly excited by this prospect of having a diversity of assets in different markets with technology to keep our cost base where it needs to be as well.
It sounds like an exciting future ahead. Well done for your journey so far, and good luck for the future.
Thanks, Simon.
Thanks, Jarryd.